a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about Magnificent Seven earnings and some of the ETFs that you could use to play those earnings. So, this is the biggest week of the earnings season, with more than a third of S&P 500 companies reporting, including 5 of the Mag 7. Alphabet reports on Tuesday, then Microsoft and Meta on Wednesday, and Apple and Amazon on Thursday. So these stocks, technology stocks in general, they had a blockbuster rally in the first half. And after that, they actually took a breather in the third quarter. And then in the fourth quarter, it seems that these stocks are leading the market again. In fact, the NASDAQ composite posted a new all-time high on Friday, and that was for the first time since July. Now, looking at the performance of these companies individually, obviously, NVIDIA has been the biggest winner. The stock is up more than 190% year to date. Then Meta Platforms, that has been a surprising winner with a gain of about 65% year to date. The other stocks, they are their performance is somewhat similar to the S&P 500 index's performance, excluding Tesla. So Tesla's stock was actually down year to date earlier, and this was the first one to report its earnings. And after reporting its earnings, the stock surged last week. So now it is kind of flat for the year. Now, as per Zacks earnings trends, this group of Magnificent Seven stocks, they are expected to report about 17% earnings growth compared to the same period last year, and that is on 13.3% higher earnings. Now, what investors will be watching in particular will be capex, capital spending by these companies. So these companies, particularly Microsoft, Amazon, Alphabet, and Meta Platforms, they spent a total of 106.2 billion in capital during the first half of the year, and that is according to Wall Street Journal's calculation, and this is up 49% from the same period a year ago. And not all of this capex is going on AI, but a significant part of that is going on AI build out. And so investors will be watching the capex outlook closely. And as we saw from earlier quarters, these companies are not slowing down on AI spending because AI race is heating up. And investors are now closely watching whether the earnings growth will justify this significant capital spending on AI. Now, NVIDIA is not going to report for at least another month. They will be reporting later next month. But the results of these big companies, they are likely to impact NVIDIA's stock too, because NVIDIA is the biggest beneficiary of this massive AI build out. These companies are buying chips, NVIDIA chips. And as far as results of these companies are concerned, investors will be closely watching the return on AI investment if there is any guidance by these companies. Now, let's take a look at some of these stocks. So, Alphabet will be the first one to report. This is currently a Zacks rank number 2 buy rated stock. And if we look at the valuation on forward P basis or forward P multiple of 21.6 times, this is the cheapest in the group. And the main reasons are that the company faces regulatory hurdles, including the possibility of breaking down, as well as rising competition in its search business. So, looking at the detailed estimates, you will see that analysts are expecting year over year growth of 13.7% in sales and about 18% in earnings. Microsoft is a Zacks rank number 3 hold rated stock. And this is trading at a forward P multiple of about 33 times. So investors will be closely watching whether its cloud computing service Azure, whether it is getting a boost from Microsoft's AI spending, because Microsoft has been one of the biggest spenders on AI build out, and they were the first one to invest in OpenAI, a major investment in OpenAI as well. And analysts are expecting about 14% growth in revenues and 3% growth in earnings. Now let's take a look at Meta Platforms. Meta is a Zacks rank number 2 buy rated stock. This is also trading at a reasonable valuation of 26.7 times. And this has been one of the big winners this year, as I mentioned earlier, because so far Zuckerberg has been able to convince investors that AI has started contributing to better results in digital advertising. So they are presenting better advertisements to their audience. Thanks to AI, traders expect 17.6% growth in revenues and about 18% growth in earnings. Now, let's take a look at Apple. Apple has not been a big spender, and in fact, it was seen as a latecomer to the AI race. But recently, they have announced and introduced several AI features. So investors want to know whether Apple Intelligence can lead to a strong upgrade cycle. And so far, the response to their latest iPhones has been kind of meh. So we will be looking at guidance from the company. The company, the iPhone giant, also faces challenges from a slowdown in China, which accounts for about 20% of its revenues, as well as a rising competition from Huawei in that country. So we will be watching signals on all those metrics. Analysts expect about 5.5% growth in sales and similar growth in earnings for Apple. And then last but not the least, Amazon. Amazon is also a Zacks rank 3 stock, hold rated stock, trading at a forward P multiple of 39.6. So Amazon is a dominant player in the e-commerce market, but it also leads in cloud computing. It is the largest player in the cloud computing market, and that is its high margin business, AWS. So AWS margins are watched very closely. And as also recently, analysts have been watching growth in its digital advertising segment as well. Analysts expect 9.7% growth in sales, 34% growth in earnings this quarter. Now, let's take a look at some of the ETFs that investors could use. So, one of my favorite ETFs to play the Magnificent Seven group is the Invesco QQQM ETF. This is the cheaper version of the ultra popular QQQ ETF, and it charges an expense ratio of 15 basis points. And the Magnificent Seven account for about 45% of the portfolio. To take a look and learn more about this ETF, you can go to the code page on Zacks.com, read our research report articles using the link. You can go to Invesco webpage for this ETF. And as I mentioned, these are the top holdings, Max 7 accounting for about 45% of the portfolio. Now, there are some new ETFs that you could consider if you want outsized exposure to the Magnificent Seven group. These are the new ETFs launched by iShares. iShares Top 20 US Stocks ETF Top T, which holds the top 20 stocks in the S&P 500 index, and the iShares Nasdaq Top 30 Stocks ETF. The ticker symbol is QTOP. So, as the name suggests, top 30 stocks in the NASDAQ 100. And let's take a quick look at these ETFs. These two ETFs, you will see similar kind of holdings. Both these two ETFs by iShares, they charge 20 basis points each, and their exposure to the Max 7 group is about 55%. Another ETF which is worth a look is the Magnificent Seven ETF by Roundhill. The ticker symbol is MAX AGS, and this actually provides equal weighted exposure to this group. The others are market cap weighted. So you will see a lot of exposure on those ETFs. You will see a lot of exposure to the top three, NVIDIA, Apple, and Microsoft. In this, you will see that all these, they're almost equal weighted, and at the time of rebalancing, they will be brought to equal weights. This has an expense ratio of 29 basis points. Another ETF, which is worth a look if you are bored and tired of the Magnificent Seven, and if you think that the rally is going to broaden out, the 493 stocks in the S&P 500 index are going to outperform going forward, then you can take a look at this new ETF, which also made its debut just last week, like the two iShares product. This is by Defiance X, Max 7 ETF X MAG. Let's take a look at this ETF quickly. So if you take the Max 7 out, this is what you will get in the portfolio: Broadcom, Eli Lilly, JP Morgan Chase, Berkshire Hathaway, Exxon Mobil, United Health Group, and others. Now, let's take a look at single stock ETFs. So, single stock ETFs can be very effectively used for short term trading purpose, particularly by high conviction traders or investors. And since earnings could result in big moves for these stocks and NVIDIA as well. So you can probably take a look at these ETFs for short-term trading purpose. But remember, these products are not meant for buy and hold investing, and they should be used only by investors or traders who closely monitor their portfolio. So I have the most popular single stock ETFs here. The biggest one is NVDL by Granite Shares for 2x exposure to NVIDIA. And then for Microsoft, you can take a look at the product by Direction, which also provides 2x exposure, MSFU. For Apple, AAPU also by Direction. For Meta Platforms, the ticker symbol is FPL, Facebook long. This is by Granite Shares. And for Google and Amazon, these are the two products by Direction, both 2x, GGLL, and AMZU. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week.